Alright, well hey, good morning everybody. John here with Crypto Top 10 coming at you with some of the trending articles in the crypto news space for Friday, November the 20th. Boy, what a nice little day. Prices are on the up and up. Ethereum just hit over $500 for the first time since like July of 2018, so that's been pretty nice. I do hold a decent amount of Ethereum, so I'm in a good mood. I hope the rest of you are as well. But yeah, market seems to be pretty green right now, but we'll get into that a bit later in the video. Right now, let's talk about what's kind of going on out there. So first things first, fun little tidbit, Crypto.com just unveiled that we're going to be able to stake Uniswap and Polkadot on the platform. Not too bad. For those of you who don't know, Crypto.com is a Hong Kong-based centralized finance or CeFi institution. It allows you to buy, sell cryptos, basically like any other exchange, but you can also stake assets on the network to earn that same asset as interest, which is different than DeFi. Typically, if you provide liquidity to a pool, you earn that exchange's liquidity token. With Crypto.com, you stake Bitcoin, you earn Bitcoin. You stake Polkadot, you earn Polkadot. It's kind of nice like that, though the interest rates are generally less. Look, CeFi products like Crypto.com, they're not going to try to hold back from capitalizing on the DeFi boom. Uniswap is a token that looks like it's going to be around for a little bit despite being fairly new. Uniswap seems to be doing rather well. I've had some doubts about them this week, but they seem to be coming out of it stronger than ever, which we'll talk about a bit more. So if you are on Crypto.com and you are what is called a Prime user, i.e. you participate in their debit card program, you can earn up to 5% on staked funds of Uniswap and Polkadot. Everyone else gets 3%. Like I said, it's not the best interest-wise. It's way more than a bank account or a savings account will ever get you. Well, it's not too bad. But their crypto earn offerings are pretty decent. They dole out about 6% of returns to users for altcoins and up to 12% on stable coins. I will be perfectly clear with you guys. I have Crypto.com app on my phone. I use the Crypto.com app. I have things put into their crypto earn wallets. I've been overall pretty happy with them. I don't really consider them to be a scam, though their token hasn't been doing well because, quite honestly, they were offering some pretty insane incentives to drive users early on, and now those incentives are drying up. You can just look at Uniswap to see that that is not something that Crypto.com is suffering with by itself. But yeah, no, it's a nice little token. It's something to look into if you're already using Crypto Earn and you've got Uniswap or Polkadot. Well, hey, good news to you. You've got another opportunity to earn some interest on your idle assets. What fun. Hopping on over, we're going to touch back on Filecoin because they hit a pretty decent milestone. So Protocol Labs CEO and founder Juan Benet indicated that the Filecoin network is exceeding expectations for large-scale storage. According to him, since the 2017 ICO finally launched in October of this year, the decentralized blockchain network for renting out and borrowing computer storage space has reached 1 exabyte of storage capacity, which is about the total size Dropbox was when it's filed its IPO in 2018. For those of you who don't know, 1 exabyte is 1,000 petabytes, and 1,000 petabytes and 1 petabyte is 1,000 terabytes. So 1 exabyte is 1,000,000 terabytes of data. Your average computer hard drive nowadays will typically have 1 terabyte. So it is quite the chunk of data. Benet was quoted as saying, "When we first set out to do this, many people laughed at us and laughed at me directly, saying you'll never get a decentralized network to exceed a few petabytes, maybe 10, and now we're passing 1 exabyte. I mean, it is pretty impressive. If you want to compare sizes, Twitter produces about 4.3 petabytes in a year. And data company Xenia estimated that in March of 2019, Netflix has about 60 petabytes of movies and TV shows, or 6% of Filecoin's current capacity. So they've got a lot of storage space and plenty of room right now. So the network, which does rely on miners for storage, has a lot of excess capacity. According to Filecoin storage stats, last checked on November the 19th, 761 gigabytes of data are currently being stored on the network, which is not that much, quite honestly. But the network seems to be pretty darn healthy despite all that, because it is based off miners and adding capacity. So as long as miners remain profitable and are able to sell their Filecoins, honestly, the number could be 0. And the network would still continue. But the next step for Filecoin, now that they are able to pretty easily compete with legacy products, I mean, they're pretty close to Dropbox at this point. They just need to get moving with getting a lot of applications and documents and stuff and users over to the network. Beyond that, they need to start looking into the frontier for new kinds of use cases and what they can do with that storage and new kinds of applications that people haven't built before. Basically, to quote Field of Dreams, if you build it, they will come. Well, they've built it. Now, as long as they've got a good UI in place and competitive pricing, they'll probably do pretty well. I expect Filecoin to continue to grow and develop. If you're holding Filecoin, this is pretty good news for you. As long as they continue to upgrade their UI and entice businesses to come in, it's going to be a healthy ecosystem for some time to come. Hopping on over, it's Uniswap week this week. That's right. So the cost to buy Uniswap surged 24% over the past 2 days, reaching a 5-day high of $4.01 during an early morning trading session this morning, Friday, November the 20th. For those of you who have not been following on with the saga, on the 17th, so Tuesday of this week, liquidity pool mining incentives dried up for 4 of the Uniswap's liquidity pools, prompting a decrease in total value locked on Uniswap to drop from $3 billion to about $1.5 billion. So about a 50% drop, as other DeFi exchanges smelled blood and upped their own offerings or launched new offerings that directly competed with the now closed Uniswap offerings to get users to pull over. Now, a lot of people, including myself, predicted a pretty steep drop in Uniswap's price. That didn't really happen. Now, Uniswap has put forward a governance proposal that would reopen these pools with slightly lower rewards, and it's going through voting, and early indications appears that it's going to pass, but no governance proposal on Uniswap has hit the 40 million votes needed to pass as of yet. So it remains to be seen if they're able to drum up that level of support. But according to Jeff Dorman, Chief Investment Officer at Arca, the total number of value locked inside liquidity pools does not determine its token's value. It's the volume that does. And after reading this, I do kind of agree with them. Uniswap pools had more liquidity than they needed to facilitate trading, and the excess liquidity left once Uniswap farming ended. This doesn't affect the volume. The TVL is pointless for Uniswap if there's more capital than needed. So basically, all these pools were oversaturated. They had way more liquidity than what was required for the volumes being traded on the network. So even if the total value locked decreases by 3%, it doesn't affect the product itself. You're still able to easily swap between pools. Ergo, oh well. So we lost some TVL. That's fine. If you want to go to Uniswap and swap, you can still do that easy. And Uniswap is one of the big boys. It's one of the originals. And as of that, Uniswap's customer base is a bit stickier, i.e. they're a bit more loyal. People who've been going to Uniswap trust it because they've been going to Uniswap for so long. So the protocol would keep performing well as long as it can put its capital to use productively. Liquidity mining incentives can be valuable and powerful, but without goals and analysis, it is just inflation, according to Jeff. I kind of agree with him there. I expected a much bigger drop, and this kind of explains why. Yeah, the TVL drops, but for those users who don't pay attention to the news as much and might not even know that that dried up, Uniswap is still the place to go to easily and quickly swap Ethereum tokens between each other, and as long as that remains to be the case, the user base will probably be there. So, I learned something new. Hopefully you guys did too. Alright, so moving on. United States regulators, specifically the Texas State Securities Board, just picked up about 15 Bitcoin and forex scammers in a sweeping action. I did want to highlight just the one, though, because I thought it was pretty funny. But they filed charges against 15 illicit operations in Texas, advertising false crypto, forex, and binary options investments. So, Securities Commissioner Travis J. Isles, which is such a Texas name, announced a series of enforcement actions as part of proceedings against the scammers. 10 internet investment platforms were linked back to one guy, a James Blundell. Blundell is also a very Texas name, if you ask me. But this guy allegedly drew up the scheme to promote these fraudulent investments. Mr. Blundell, a resident of Texas, was also accused of using numerous social media accounts to propagate these scams, including 3 Instagrams, 7 Facebooks, and 1 LinkedIn profile. So he was moving. The accused capitalized on his social media presence to position himself as a thought leader and successful trader in the cryptocurrency markets, as well as his dealings in binary options and forex trading. He was even found to advertise an official trading license issued by Texas City to cement his claims. However, any such license were a forgery. Also, he was found presenting potential investigators with an image of a forged Texas driver's license. So, yeah, this guy did quite a bit of stuff, and it's just even more important. I just wanted to shout this out. Don't do business with people like this. Do not send people money who reach out to you on the internet. They are going above and beyond to make these businesses appear legitimate. It is absolutely okay to walk into, a business or a bank or someone with an established Facebook profile, but if they're reaching out to you with an offer that seems too good to be true, it probably is. So just be very, 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 very careful, and as always, never risk than you are more than willing to lose. Cool. Still good on Texas, locking that down. Alrighty, so I wanted to touch on this because it's kind of interesting, but according to this Brad Mickelson, global search volume for Bitcoin is actually higher than 2017, despite what Google is lying to you about. Probably not lying, but anyways, according to data collected by this guy, a senior marketing manager at a major trading and investment platform, eToro. The monthly global volume for Bitcoin searches in December 2017's bull run was lower than it is this month, November of 2020. Citing data from SEO provider SEMrush, Mickelson said that Bitcoin-related global monthly search volumes in November 2020 accounted for 8.9 million, which is 3.5 times more than Bitcoin search volumes back in the good old days, which amounted to 2.5 million, according to Mickelson's data. Now, I did look up SEMrush because I was interested in seeing, and they've actually been labeled as a fairly inaccurate SEO provider, but normally because they vastly underestimate traffic. So that number could actually be higher if the pattern that SEM has shows true. Like, I looked it up and I was like, oh, this is one of the most inaccurate ones. I'm like, all right, well, here we go. Oh, it vastly underestimates things all the time. Huh. Well, okay. So he did point out this huge discrepancy between SEMrush's data and Google Trends, which is a popular tool and one I've used on this channel in the past, to show the popularity of search queries in Google. Quoted saying, an interesting thing that Google Trends data hasn't shown is that the monthly global volume for Bitcoin in December 2017 was actually lower than what we're seeing for November 2020. Maybe Google Trends shows more the percentage of change between search volumes. I don't know. I'll have to do some more looking into Google, but it's also possible that SEMrush was looking at different things like Bitcoin, Bitcoin BTC, Bitcoins, how Bitcoin wallet. You start taking all these other separate terms and lumping them together, you can get some pretty high volumes versus Google trends just looking at specifically the keyword Bitcoin. So maybe that's where the discrepancy has come into place. But look, Bitcoin is definitely on a high and long upward trajectory. So we can quibble about search volumes all day, every day if we want, but it is definitely something interesting to see that we might be not getting the full picture from Google, but well, when are we ever getting a full picture from a large conglomerate? But yeah, and then kind of to wrap things up, outgoing SEC Chair Jay Clayton had some comments about Bitcoin. He was the guy who oversaw the rejection of not one, not five, but 9 Bitcoin ETFs during his tenure, which was actually pretty long for an SEC chair, going from 2017 till end of 2020, but not a very controversy-filled one. Appearing on CNBC's Squawk Box yesterday, Clayton, who's due to step down by the end of the year, confirmed his agency's general assessment that Bitcoin was not a security but a payment mechanism and a store of value. Despite his being widely criticized for keeping a tight rein on Bitcoin, during his years as SEC chair, Clayton was never a staunch opponent of Bitcoin, but regularly expressed his fears that average investors could be subjected to unnecessary risk when investing in a Bitcoin ETF, though most people in the Bitcoin space, including myself, would say, yeah, that's entirely possible. The crypto space is very risky, but we still want one. But he did cite that the risk is due to the SEC's perception that the largely unregulated nature of some Bitcoin exchanges makes it too easy for the price of Bitcoin to be manipulated. Again, that's probably a fair assessment. It's just we in the crypto space want the Bitcoin ETF, or we definitely did at the time. We thought that was going to pull us out of the doldrums that was the 2018 bear market, and hopefully take us into a new boom period. But alas, it was not to be. Look, it could be a pretty big deal that he's stepping down. The market is definitely in a very different place than it has been in the past. However, I do completely understand that the risk associated with a Bitcoin ETF has not completely mitigated. One only needs to look back a few months ago when Bitcoin was trying to surmount the 10K mark, and surprisingly, every single time it would get there, Coinbase and BitMEX would go down, and all of a sudden we'd be back in the low 9s. Kind of makes sense, if you ask me, that they might have some issues with it. We've criticized them on this channel, criticized crypto exchanges on this channel in the crypto space more than enough. But he does definitely have quite the backup behind him. Clayton was the first member of the SEC to issue a warning about the potential pitfalls of ICOs during the 2017 ICO craze. He reminded the public that such products were usually security offerings and subject to regulations, and they proceeded to then pursue the companies that were offering these, and won several successful court cases as a result of it. So while we may not love Jay Clayton, we all have to respect him. He was effective, and he never truly opposed crypto. He simply felt what he was doing was looking out for the average citizen at large, which, while I might disagree with some of the way he was doing it, I do, however, commend him for his principles. But that will do it for the trending articles in the crypto news space. As touched on before, it's a pretty green day. Bitcoin up 3% on the day, well over 18,000 again. Long may it stay there. Ethereum is actually closing in on $510. It's currently sitting at 508, up 7.28% on the day. Not too bad. I'll be interested to see if that continues throughout the day or if we get a bit of pullback. In fact, it's pretty green across the board. Everything's doing really well in the top 10. Polkadot up 13%. Obviously, it is that Crypto.com announcement that is fueling it, definitely. But yeah, nothing in the top 10 is red at all. The one that's up the least is Bitcoin SV. Why? I don't know. It should be like $5. That's my opinion. It's only up by about 0.5%. Biggest loser on the day, in fact, Blockstack is only down 5.86%, with Nexo being down 4.81%. Nexo does tend to fluctuate quite a bit, in my opinion. They are not on enough exchanges, and they need to fix that. Biggest winner on the day, SushiSwap up 26%, Waves up 24.5%, DeFi.money up 21%. Pretty good day. Oh, look, Midas Touch Gold's popping up. But yeah, if you've made it to this point, my name is John. This has been Crypto Top 10s, trending articles in the crypto news space. Please subscribe if you haven't already. It's simply hitting that little button. It helps me out quite a bit. Articles and links to the articles will be down in the description so you can do your own research. And finally, if you're finding this on YouTube, hit the like button or something, I guess. It helps the algorithm, and I think I'm trying to grow this channel. Not just yell into the void, but, you know, whatever. Yeah, peace.